Big tech earnings sent the numbers higher today. Check out the NASDAQ up around 50 points, about 45 minutes before the close. Could tech stocks lead us to a summer rip? Bank of America thinks so, and so does our next guest. We have Ben Emons, NewEdge Wealth Senior Portfolio Manager. Good to see you. So a summer rip, that is a new one for me. Sounds good unless you read it. Looks like RIP, which could go the other direction. What's ahead for big tech after what we saw yesterday from Microsoft and Google?
Yes, indeed, the RIP. And I think the right way to say it, I guess, is maybe RIP. On the one hand, the market being under pressure because of the banking crisis lingering. On the other hand, I think what big tech is finding out is that artificial intelligence is suddenly becoming this anticipated hype, but also something that's very important to them to try to continue to drive growth and earnings. And to some extent, what Google and Microsoft yesterday reported was that is going to be an important part of their business going forward. So the jump in Microsoft, particularly today, was driven by that view that they are the leader in the artificial intelligence and they're taking a real step forward. So that, I think, is behind that rip because, Microsoft has a huge weight in the NASDAQ, over 12.5%. So you can expect somewhat more outperformance from here as more news comes out of artificial intelligence and how it affects tech earnings.
So, Ben, it doesn't sound like that you think a lot of the hype that we've seen over the last several months surrounding AI seems to be overdone, at least to this point. But what about some of the risks that government officials are looking potentially to crack down on AI? What does that mean from an investor perspective?
Certainly something to account for because, like we've in a more extreme version seen with the Chinese government, really, right? If you start cracking down, it's really quick getting a negative sentiment across the market. And so I think in this particular case, it's about, okay, is artificial intelligence going to reduce employment in the future in a major way? That seems to be the biggest fear. And that is to be seen. It's been around for a really long time. It's just a matter of how it's implemented and what it does to what is a good thing, productivity. People point back to this latest episode of AI boosting these tech shares, as in we're back in the 90s of technology is upgrading and therefore leading to the productivity boom. That's true, then that would actually be a really positive development for the economy. So it's a mixed picture, but I take your view that yes, the government will be very careful here in terms of having AI implemented that could then affect employment.
AI is certainly all the buzz. It was mentioned 50 plus times on the Google earnings call, but isn't the earnings story still all about the cloud?
Very much, and that's what drives it mostly. And I think that was for, in that particular case, Google, somewhat of there was a positive element in it, but it was not really driving the stock much today, as the AI hype, I think, overwhelmed the initial stage of the opening of the markets. But I think these companies are in a position here to still deliver top line growth. And in a weakening environment that we're dealing with, people pay up for growth. So can you get to higher multiples here? Yes, you can. But I also think that these stocks have at least longevity because it does show these companies can weather economic change, especially that we're going through now, which we're seeming to move more and more closer towards this point of recession.
Ben, let's switch gears here and talk about what's going on within regional banks because First Republic Bank was actually just halted once again. It's been halted a number of times throughout the trading day, a number of times since the top of the hour. How do you assess or how are you assessing the risk that First Republic Bank faces right now, what that really means for the broader banking sector?
Yeah, it's certainly an issue because in the case of First Republic, it's really about seeing client assets very quickly going out the door now. That's a new dynamic compared to what we experienced with the deposit flight that we saw in March. And so I think this does give a signal to the broader market that the troubles are not over just yet. And the confidence issues are continue to be, I think, the main driver behind the depressed shares of regional banks, because as much as the Fed stepped in March, the regional bank index has not really recovered. Now, the rest of the stock market did, but not regional bank shares. So, and in addition, that those bank shares are really more closely linked to what's happening on the ground in the economy. And if it is weakening and it's going to lead to less lending, then their margins are going to continue to shrink. So I think it's a ongoing story. I don't want to draw necessarily a parallel exactly to what happened during 2007-8. But there's definitely a sign here of that as regional banks continue to weaken, it does point you to an economy that continues to slip. And I think that's the bigger message for investors.
As for First Republic, can they possibly survive without government intervention?
And it's really up in the air right now, right? There's still a lot of call for to get the private sector involved and infuse another, billions of dollars either through deposits or an equity infusion. So it's this sort of like stage that we've seen before with some other banks as we head towards the weekend, right? Another sort of like emergency situation. What will be challenging here is that the FDIC, already having stepped up quite a bit for the other deposit holders at Signature Bank in Silicon Valley, took a big hit on that insurance fund. So there's some limit there what they may be able to do in order to help out, in this case, First Republic. So it's really up in the air what will happen here. It's interesting to note, though, that it didn't have the contagion effect today as it did yesterday, and that was really because of the revelation of the earnings from First Republic showing this huge decline in deposits, that markets have digested it. But I think it will continue to be a lingering risk hanging over the markets into the summer.
And just resumed trading once again here, now off 36% today. Ben Emons, great to have you. Thanks so much.